Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here today. We're taking a look at VET, V-E-T. This is one of my favorites personally. I am bullish on VET. I love it. I think it's a fantastic project, essentially. Good quality coin, but you do your own research, of course, at all times. This is for educational purposes only as well, and just bear in mind, I'm not a financial advisor, but I do have a tremendous amount of experience I'd like to bring to the table, help you understand, become more profitable and responsible traders. Before we get started though, just know there's a link to my Telegram community down below. Awesome group of folks there. Feel free to get engaged. I've also got a private Discord channel in my actual Patreon account. It's kind of a newer thing, but it's growing. It's actually really cool. So if you'd like to get engaged there and learn as much as you can, feel free to join that as well. Show your support. Thank you in advance. And of course, there's $25 in Bitcoin from Voyager down in the description below. So reference that all on your own time. For now, let's go ahead and get to the technical charts on VET. Check it out. All right, folks, let's go ahead and take a look at VET. So this is VTHOR, and we're going to just go ahead and take a look at Bitcoin and Ethereum first, of course, get a baseline as per usual. So if you're new to the channel, we always look at those two, kind of get an understanding of what's going on overall, because those are the two largest coins, and most things are very respondent to Bitcoin selling off or increasing, whatever the case is. Bitcoin does well, all altcoins do well, right? So that's kind of the concept here to look at that first. So let's go ahead and start with that. So starting with Bitcoin, just something to note, of course, if you're not already familiar with this, you probably are, obviously, but that most recent sell-off was Tesla indicating that they would no longer accept Bitcoin as currency for purchasing their EV. So that's that's unfortunate, but it went from roughly 58,000 all the way down to about 48,000 in a matter of 8 hours. So it was brutal. That was tough for a lot of us, but normal. I mean, we see this happen all the time. This is Bitcoin for you. Just be ready for that. But good news is, previously it did consolidate and increase back up. So we're hoping for the same thing to occur, consolidation. It's bounced off of this support level numerous times so far, about 6 times in the past month. And that support right now is approximately 47,800. It's plus or minus a few hundred, of course, because it's not testing the exact same spots, but it's really close to this 47,000 range. So that's, I would say, the extreme worst. Now, unfortunately, Bitcoin just had a major little sell-off, a dump, so to speak, and it went down almost a good 1,000 just recently. So we'll see what happens, but it does look like it just bounced off that support level. So we should still be in good shape. And just note as well, all the moving averages are essentially above, they're trending above, so Bitcoin has a lot of room for improvement here with 3 major resistance levels and, of course, 3 moving average resistance levels too. Just something to note, and by the way, I always use Binance. This is the Binance application, trading view within Binance desktop app. And this is the 4-hour chart for Bitcoin. Moving on to the 4-hour chart for Ethereum. Same scenario here. Ethereum is kind of mirroring Bitcoin right now, which is odd because usually Ethereum does well when Bitcoin does poorly because people leave there and go to Ethereum. But I'm speculating that ADA is the new Ethereum because ADA has done excellent in the last 72 hours since that occurred. And we're likely going to be seeing maybe a shift in momentum towards ADA as potentially the new Ethereum, if that makes sense. Just generally speaking, that's kind of what I've seen so far. It's not foolproof, but as you can see, Ethereum's doing the same thing. It's selling off just like Bitcoin was or is, and we'll see what happens. We lost support on the 50-day moving average. Okay, so let's go ahead and take a look at VET. And I'll tell you honestly, VET is one of my favorites. I still think it has strong potential. I think it's going to be really good. It's still finding its way, and it does seem to be fairly reliant on Bitcoin. We'll take a look and see the correlation. So unfortunately, with Bitcoin kind of not really knowing what to do, VET is doing similarly. VET does go on its own sometimes, its own little tangents, but right now it seems to be kind of responding to what Bitcoin's doing more, 1-to-1 ratio, so to speak. It's kind of doing the same thing. That said, if we look down here, we got RSI is fairly low, which is good. Essentially considered to be oversold. Not really either or, though. Honestly, it's more so just kind of in a state of consolidation. Even though the price has gone up between, just say, 25 cents and 15 cents, it's going to be working itself in this channel likely for a while longer. So we'll see what happens there. Let's turn on the moving averages. Look at that. The 50-day moving average was tested and rejected twice, possibly even a third time here today. So that's a good sign as well. Tells us that the average true range, the average price, should be where it's at right now. which is normal and fine. Hopefully we see the price bounce off that line and continue upwards. I'm speculating that it will, because it does appear that it's still a good value. I mean, shoot, VET at 17 cents. To me, that's still really good. That's a really good price considering its true potential. It's got a really, really good fundamentals. Do your own research on that, but I think you'd be surprised and impressed if you haven't already with what they have to offer. Other than that, MACD is indicating that we're in a downward trend. Essentially, it's still bearish. That's likely just because of the massive sell-offs lately from Bitcoin. That is pretty normal right now. Doesn't necessarily mean that we're going to see the bearish momentum continue, because it does look like there's been a support level of about 15.5 cents tested twice. Likely those are from both Bitcoin sell-offs. In fact, the 17th was the first. So the first major Bitcoin sell-off was right here. Really wasn't all that impacted. But then the second one really took it by storm on the 22nd. This is the second Bitcoin sell-off. Price came all the way down to 13 cents. Would have been nice to get in there. And then of course we see this consolidation pattern here from Bitcoin, and then now it did its second sell-off. So it's no surprise the price is where it's at, but good news is we got a good strong support level at plus or minus 16 cents, right? So that's just something to note. So I think that we're in pretty good shape still with it being in the 17 range. It comes down to 16, it'll likely test that support and bounce off. Let's go ahead and take a look at the 4-hour chart. Now the 4-hour chart, I like to use the moving averages. Preferably, they seem to be the most effective. 100, 200, and 50-day moving average. And these are just the simple moving averages. I use the exponential moving averages on the shorter time frame. They work better that way. But right here, if you just see that you got the MA lines, they're all kind of intersecting right now and going to be working as like a triple resistance. So just bear in mind, 20 cents might be a difficult increase. If we see the price come back up, it'll likely shoot through that and hopefully hold above and stay above. But for now, we're just kind of trending around 17, 18 cents, which is neither good nor bad. It's good value in my opinion though. So if you haven't invested yet, perhaps soon will be ideal, just based on the simple fact that VET has a lot of room for growth. I think it's going to be a good coin. Again, we're not here for the fundamentals, just the technicals, so forget I said that. Make your own decision. But down below, if you look at the RSI is in good shape. In other words, it's still fairly low. In other words, it's considered oversold, so it's good value, right? And as you see here really quick, just to note, when the RSI came down under 30, we saw this increase and it consolidated. So it basically tells us that it's still bearish sentiment, because likely we should have saw a much stronger increase. But we also note too that this is following Bitcoin quite closely. So if you see what happened here, Bitcoin essentially came up and then it came back down, up and then sell off. Well, VET is kind of almost mirroring that here as well. Okay, so similar, not the exact same, but similar. It's kind of doing its consolidation thing similar to Bitcoin, but only difference is it didn't have a massive sell-off. It just had two kind of short sell-off cycles. So again, just pay attention to Bitcoin. If you see Bitcoin doing well, it's likely that will kind of come back very, very strong. So as soon as you see Bitcoin kind of making a run up to 53,300, that previous resistance level, then we could see VET do the same thing, only likely a lot stronger, and it'll break through those moving averages. Okay. But it's too early to tell. We don't really know what's going on yet. Hopefully Bitcoin figures things out soon. 15-minute chart for VET we're looking at here. RSI is in good shape. Don't really care much about the MACD, and good volume. So honestly, all good things for a short-term day trader, a day trader or short-term swing trader. So we're looking pretty good here overall with just volatility and volume. Let me go ahead and turn off these moving averages here. And I always use the EMA 15. So if you're new to the channel, the EMA 15 is my second favorite indicator, minus the VWAP, which is my primary, most ideal indicator I use for understanding what the average price should be. So in other words, let's start with the VWAP here. So VWAP is volume weighted average price. So if you're new to the channel, again, VWAP is essentially just a 24-hour volume. It takes the average volume of the last 24 hours and expresses it as a price. So right now, the VWAP line tells us the price should be $17.70. Or sorry, 17 cents, 17.7 cents. I'll get it figured out. So anyways, the price is under VWAP right now, right? So it's been traveling under that blue line for a while, which basically tells us that it's working as a resistance level. I prefer never to take entry under VWAP. I like for the price to confirm above that before I do so. So that's just my overall sentiment. You'll hear that time and time again. It might be a good recommendation to consider adopting that philosophy, because the VWAP is a really consistent support and resistance line. It works tremendously better than any moving average you could use, minus the EMA 15, and honestly, it's really good. So try to plan to use it, and again, it's just simply telling you the overall sentiment. So right now it's still bearish, but when it comes above and stays above for just say 30 minutes or longer, we got 2 solid green bars closing above the VWAP line, then that would be a consideration to take entry. So that's my thoughts there. That's what works well for me. It's helped me out tremendously since I took this into consideration. I use it every single trade. Just note, it's only good on the 15-minute chart or lower. You don't really need to bother with it on the 4-hour chart because it's not very effective. The moving averages are more effective on the 4-hour chart. So on the 15 here, just to note, again, under VWAP. And another thing to also understand is the EMA line. That's the exponential moving average. I use the 15. Most industry standards are going to be 9 and 20. I just split the difference so I have 1 moving average instead of 2. It doesn't make sense to have 2 so close to each other. The 15 is kind of just working the same as them. It's just right in the middle, if that makes sense. To me, it's more consistent. And what the EMA does is it tells you what the kind of the momentum is, right? So it's much better than the MACD in this case because it tells you specifically what's going on, and it creates a line for you on the price action instead of kind of hypothesizing down here. So what's nice about the EMA, and let's just turn off the VWAP so you can see it a little better. The EMA really tells us what the momentum is in that little time frame, right? So on a 15-minute time frame here, just say for example, this is roughly the last 24 hours. This little spot here, the last 24 hours, you know, we were bullish here, came ramping up and stayed above the EMA line, lost it, tested, rejected, and came up, and then we lost EMA and likely VWAP at the time, and the price came down. Tried to work itself up above, lost it again, and kept going down. So I try to practice and try to teach waiting for confirmation with the EMA line. It's a really helpful way to do that. So if you use that in conjunction with the VWAP, you can kind of double your chances of making sure you're taking a good entry. Okay, so that's kind of the general concept there. Let me look at the 1-minute chart with you and kind of show you how the EMA line works more effectively, because it is better on the 1-minute chart just because you can kind of see how it's testing and rejecting certain levels more frequently. So there's not good data here for a long position. Let me just go back a little bit so you can kind of see what I'm referring to. That's too hard of a ramp up. But let's just say, for example, we're back here, right? We're trying to take entry here. If you're looking, okay, I want to try to take entry, and you're chasing the bottom here, right? Never chase the bottom first of all, right? It's a terrible idea, terrible concept. The only way to actually truly chase the bottom is to wait for confirmation. To do that with the EMA line is, instead of letting the price come down and let's just wait for the first green bar to take entry, that's not a good tactic. Even down here isn't a good entry point, truly, because you don't have confirmation. The main reason why is because it could come up, reverse, and come back down. So in this instance, what I do first of all is I wait to look and identify 3 solid green bars. It tells me there's momentum shifting in a bullish upward pattern, right? A long position. So just say for example, you see these here, these 3 patterns. In other words, we got, get a little closer there for you. So you got these 3 green bars, right? You're like, okay, great, I'm gonna go ahead and take entry. And then you take your position at approximately this line here, which wouldn't be terrible, don't get me wrong, that's not the worst idea. But is it true confirmation? Are you getting the confirmation you're looking for? The answer is no, and the reason why is because this is only the first solid set of green bars. That tells you that it's moving upwards, yes, but it's not confirmed that it's moving upwards yet, right? So if you wait a little bit longer, just say for example you see it come down and test the EMA, it kind of loses the EMA but it stays above, it loses the EMA again but stays above again. That's a case in point where this isn't the most effective entry. Not terrible, don't get me wrong, but not great. And by the way, if you were to take entry, only take like a 20 to 30% position. Never go all in, because all in is just a terrible, terrible way to lose money. It's so easy to do that. And I'll explain later on one of my tangents, of course, why it's effective to have risk tolerance. You always want to shoot for a 2-to-1 ratio. If you're all inning all the time, that ratio will really, really jack you up. But we'll talk about that later. So what I'm getting at here is, had you taken entry there, not the best, not the worst entry, but not full confirmation. What confirmation is waiting for the price to bounce off the EMA line, just say twice. So for example here, let's just say we take this right here. So this comes up here, and you decide to take entry at this point because you got your 3 solid green bars. Now, if you take entry there, again, not terrible, but not the best thing ever because of the fact that we didn't have full confirmation. Now, what I'm getting by is, you didn't see this here, this EMA line's here, lost EMA, it wouldn't have been a good entry point anywhere here. So you decide to take entry here. Not terrible, but not great because you don't have full-on confirmation. The confirmation I'm waiting for and I'm looking for is to ensure that the price stays above the EMA line. So see how it comes up here, comes back down and kind of holds this EMA line? It's essentially holding, and you can see it more so here. You see where this line right here, see how it's holding on the EMA? It's kind of moving up with the moving average. That's the case in point where you get the confirmation. So, and if as soon as you see this, just wait for it. And then once you see this confirmation here, you can consider taking entry somewhere in this range, or just say maybe somewhere in this range. Because you're confirming that the bullish momentum is trending upwards. Again, it's not an exact science. In fact, VET is difficult to negotiate right now or navigate based on the recent sentiment and what happened recently. So it can be difficult to find a good entry point because you see a lot of red, green, red, green, red, green. There's not true confirmation. It can be tough to decipher. So in other words, this is what true confirmation looks like. You see this here, 1, 2, 3 solid green bars above the EMA. Okay. So ideally, this would be a good entry point, and then you see it come up, come back down. And as soon as it tests the EMA line, it loses, and it goes under the EMA line. That's when you take out your position. So I'd probably sell somewhere in here once I don't get confirmation that it bounced off the EMA and comes back up. But what's nice, see again, you take that little entry point there, that puts you at about 2%, and you might laugh at that, but 2% is great because here's the thing: if you have a risk tolerance of 2 to 1, and just say you go into this trade knowing that I'm going to get out of my position if it comes down, just say by a small percent. Just say you set your risk tolerance of that right there. I'm going to get out as soon as the price comes down to 17.6, and the price comes up to somewhere in the range of 18.2. You're going to have that 1 to 2% increase, but you would only lose 0.5%, right? I mean, ideally, the easiest way to understand it is 2 to 1, so 1%, 2%. But in scenarios like this, when it's smaller gains, you want to have smaller risk tolerance. You want to basically lose less. So what I would normally do in a situation, hypothetically, is I would wait for confirmation. I'd take entry here. I would take maybe a $200 or $300 position on a $1,000 balance, and I would write it up. Again, I would wait for confirmation. If it loses EMA, then I would essentially consider exiting my position. Okay. So again, that's kind of just generally how I approach my trades. I like to take small wins, and I like to take them frequently. I don't like to ride the lightning and just hope for the best, because there's no sense in that. Like, obviously, say you did this and you took this position here, and you got up here to say a 2% gain, and you got greedy and you just decided to wait out. Oh, it's going to come back up. It's coming up again. And then look at this. All your gains are gone. Everything's lost, and then you're in the red here all of a sudden. Granted, if you took a smaller position, you'd lose less. But the fact that you took entry and got greedy and held on for too long is why you lost that profit. It happens all the time. So that's why you set a target before you start trading. So in other words, in this example here, if just say your target was to gain 2% or 1%, then you'd set that marker here, and be like, okay, 1% is here. So you set that as your target. You'd enter in here, you'd get out here, and yes, it keeps moving up, and yes, you could have got more profits, but it doesn't matter. You took your profit and you made your money. That's the important thing. That's the only way to grow, is to consistently take small wins, right? So for me, my overall goal is to grow my portfolio by 1% per day. It may not seem like a lot, but if you're familiar with exponential growth, you'll understand that's the 7th wonder of the world, and it is a significant increase once you continue to increase by 1% per day. Well, I think an example of it is if you start with like $5,000 today and you just grow by 1% every day, you will have $187,000 at the end of 1 year. I don't know the math on the end of 2 years, but I'm pretty sure it's in the millions because you're consistently adding 1% every day. So again, my growth is just 1% per day for my portfolio size. I don't always hit that. There are some red days that I have too, don't get me wrong, I'm not a perfect trader. But I would say my success rate is somewhere in the range of 60 to 70%. And the main reason why is because I have good risk tolerance. I will have 1 or 2 losses in a day. But if I have 3 or 4 wins and they are 2 to 1 ratio, that is a significant increase, significant benefit. Okay. So again, try to get yourself in the mentality and the mindset of being more smart and big picture instead of just trying to get all these like big 10x, 20x, go to the freaking moon. Like, the way that these people talk about cryptocurrency, I know it's all hype and it's crazy, but if you go into it strategically as an actual trader and you don't gamble and you essentially use these technical charts to your advantage, you're going to be in a much better position. You're going to be poised, you're going to be ready, and you're going to see the gains that you're wanting. But it's not going to happen overnight. It's just a slow grind. But I can tell you, if you minimize your loss, maximize your gains, always shoot for a 2-to-1 ratio. Again, it's risk tolerance. I'll have a video regarding that. In fact, we talk about that in our Patreon account. So if you'd like to reference that, feel free. Thank you, of course, to my current subscribers. You guys are freaking awesome. You can learn and grow and figure these things out a little bit more effectively. So we're all in this together. I want to make sure that I provide good quality content, good stuff for you. So I really appreciate you listening, watching, and understanding to the best of your knowledge what I'm trying to convey here, because this is beneficial stuff. You just kind of got to be open to it and understand it. And it takes a little bit of time. It's not going to happen overnight, but just keep conditioning yourself and we'll get there, right? But I'm here for you. We got a really awesome Patreon account. Again, I already mentioned that. Sorry, I was referring to my Telegram community. You got a good group of folks there as well that all communicate openly about good entry point, best practice. We're starting a really good, we're starting to grow and find a really good place in the system here in the cryptoverse. And we just got to be responsible traders. That's the bottom line. Be responsible, be smart, and love what you do, and don't take unnecessary risks. Again, throwing a few $100s into some kind of random coin that you've never heard of with the expectation of losing it all and losing everything is perfectly fine. That's normal. Do that. Just don't expect to go to the moon on trades like this that I'm showing you, of course, because this is just a calculated, minimal risk, but also a minimal increase, and it eventually grows over time. Okay. Hopefully you find that beneficial. Sorry to rant and rave. If you listen this far, thank you so much. You're all very awesome. I love you, my community. Thank you again for your support. Wouldn't be here without you. So again, let's continue to grow and learn together, and hope you have a great rest of your day. We'll talk to you soon. See you in the next video. Bye.